Singapore's 60% stamp duty didn't just kill foreign investment demand for property here. It redirected $600 million in annual capital elsewhere. In April 2023, Singapore doubled its annual buyer stamp duty, the ABSD, for foreigners from 30% to 60%. So, a $2 million condo now costs $1.2 million in tax alone. The impact was immediate. Transaction volume dropped 71% year on year, and the core central region, where foreigners historically concentrated, saw the sharpest decline. But this also affected Singaporeans. Investors buying their second or third property also faced 20 to 30% ABSD, and the domestic investment market got squeezed too, so the capital moved. So where are Singaporean property investors now buying? Well, Australia leads the pack at 27.5%, familiar legal system, education planning, stable currency. To evidence this, Singaporeans bought just over 300 million Aussie dollars worth of residential property alone in 2022 to 23. Thailand is second at 16.5%, Bangkok condos, Phuket villas, entry price is a fraction of Singapore, and of course no additional buyer stamp duty equivalent for foreigners on condos there. Malaysia, surprisingly, is actually third at 13.2%, specifically Johor. The RTS Link connecting Johor Bahru and Woodlands opens in January 2027. Johor property transactions grew 47% in the first half of 2024, and over 40% of the buyer inquiries are now Singaporean. Japan, surprisingly, is the number 4 on the list for Singaporean property investors at 12.6%. That one accelerated quickly. One major brokerage reported that Singaporeans now represent half of their transactions, up from 30% in the previous year. Now, to put this in context, the Tokyo freehold apartment that might cost $500,000 5 years ago now costs only $415,000 in SGD terms, same yen price. And the yields in Osaka and Fukuoka run between 5 and 8% versus the 2 to 3 that we're seeing here in Singapore. The capital didn't just disappear. It found better markets without the 60% entry barrier. And this matters for 2 reasons. First, if you're a foreign investor looking at Southeast Asia, you're now competing with well-capitalized Singaporean buyers in Thailand, Malaysia, and Japan. They have strong currency, and they pay cash. The second, this creates a concentrated demand in specific corridors. Johor's RTS zone, Bangkok's BTS adjacent condos, and Osaka's short-term rental market. Prices in these micro markets are moving faster than national averages, partly because Singaporean capital is clustering there. The structural insight: when one market closes, capital doesn't just evaporate, it compresses into the next best options. Save this if you're researching any of these 4 markets. Understanding who is buying and why shapes your entry timing and exit liquidity. I'm Alexander Linton, founder of RUMAVI. We help foreign investors identify where capital flows create structural demand versus where you're just catching a falling knife. Follow for more briefings on Southeast Asia property dynamics.